This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Inflation held stubbornly at 2.7% in both November and December 2025, stuck above the Federal Reserve's 2% target. President Trump imposed sweeping tariffs throughout 2025, pushing the overall average U.S. tariff rate from 2.5% in January 2025 to an estimated 17% by year-end, the highest level in over a century. The tariffs amounted to an average tax increase of about $1,000 per U.S. household in 2025. Nearly all the cost was being paid by U.S. importers, not foreign suppliers, and in many cases importers passed those costs on to customers in higher prices. By January 2026, economists were watching closely to see whether tariff impacts would accelerate inflation or whether broader price pressures would continue cooling. On February 13th, the Bureau of Labor Statistics reported that the Consumer Price Index rose 2.4% in January from a year ago, down from 2.7% in December. This marked the lowest inflation rate since May 2025. Core CPI, which excludes food and energy, eased to 2.5% annually, its lowest reading since April 2021. On a monthly basis, the CPI increased just 0.2%. Price pressures eased notably in the energy sector, with gasoline prices falling 7.5% annually. Shelter inflation slowed to 3% compared to 3.2% in December. Food inflation remained elevated at 2.9% annually, with beef prices up about 15% and coffee prices up 18% due to supply constraints. Then on Friday, February 20th, came a bombshell. The Supreme Court ruled 6-3 that Trump's IEEPA tariffs were unconstitutional, striking down the vast majority of his reciprocal tariff agenda. Chief Justice John Roberts wrote that Trump must point to clear congressional authorization for such extraordinary powers. He cannot. The ruling could require refunds totaling $100 billion to $175 billion to businesses and consumers who paid under the higher rates. Hours after the Supreme Court decision, Trump announced he planned to impose a worldwide tariff of 10% using Section 122 of the Trade Act of 1974 to maintain tariff revenue. Section 232 tariffs on steel, aluminum, vehicles, furniture, and semiconductors remain in place even after the Supreme Court ruling. Inflation is finally cooling, but the tariff landscape just dramatically shifted. The Yale Budget Lab estimated that the Supreme Court ruling effectively lowered the average U.S. tariff rate from about 17% down to about 9%. The cost of tariffs to the average household will drop by about half in 2026 to roughly $600 to $800 annually due to the ruling. However, Trump's replacement 10% global tariff could push that figure back up if implemented broadly. Central bank officials have estimated that tariffs are worth about half a percentage point to inflation, an impact that will be only temporary at least as it figures into the way inflation is calculated. Alternative data providers like Triflation, which tracks daily transaction data, are showing inflation as low as 0.97% as of late February, significantly lower than the government's official 2.4% figure. The gap suggests consumers are increasingly refusing to accept rising prices, reducing companies' power to raise them. The trend is modest relief from inflation, but uncertainty from replacement tariffs and refund questions keeps the outlook cloudy. The ruling improves the odds that inflation cools at the margin, but it is unlikely to drive overall prices significantly lower. If you're buying groceries, gas is finally affordable again, down 7.5% from last year. But beef, coffee, and eating out remain expensive. Shelter costs are rising more slowly at 3% annually, but that's still above the Fed's target. The Supreme Court tariff ruling could mean future refunds if you or your business paid tariffs under the now invalidated IEEPA rules. Estimates range from $100 billion to $175 billion in total refunds. However, it's unclear when or how those refunds would be distributed, and Trump's replacement tariffs may quickly offset any savings. Items with low profit margins, including groceries, may be among the first categories to see price increases later in 2026 if Trump's replacement tariffs take effect. Goldman Sachs economists estimated that tariffs caused inflation to increase by 0.5 percentage point in 2025 and anticipate inflation will increase by 0.3 percentage point in just the first 6 months of 2026. The bottom line: your grocery bill might stay elevated, but energy costs should keep falling unless oil prices spike. Any tariff savings from the Supreme Court ruling could be short-lived if replacement tariffs are implemented aggressively. The February CPI data is scheduled to be released on March 11, 2026 at 8:30 a.m. Eastern Time. That report will show whether January's cooling trend continued or if replacement tariffs and seasonal price resets pushed inflation back up. Also watch for announcements from the Trump administration on the exact structure of replacement tariffs under Section 122 and Section 232. The Federal Reserve's next meeting is March 17th to 18th. If inflation keeps cooling, rate cuts could finally arrive by summer. But if replacement tariffs push prices back up, the Fed will stay on hold, keeping borrowing costs elevated for mortgages, car loans, and credit cards. The next few weeks will determine whether we're finally turning the corner on inflation or if tariff uncertainty keeps prices stubbornly high through 2026. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.